So picture this. You're identifying your market structure, higher highs, higher lows. You have a beautiful uptrend. You've got your point of interest. You've got your demand zone, your order block, or your support level or resistance level. It comes to it. You take the trade. You set the stop below the low. And what happens? Bang! Stop loss gets hit. But wait a minute, I thought I was in the uptrend. Okay, cool. No worries. Maybe we just got to break a structure and the market's reversing. So what am I going to do? Market's reversing. Let me do the opposite. I was buying, so now I'm going to sell. Cool. I've got my level. Our price is coming to my level. Sell. Stop loss enter. 5 minutes later. Yay, let me check my profit. What? Stop loss hit again? What the fuck? Oh, I should have stuck to my original bias. What's going on? What's going on? Yeah. How many times has that happened to you? You thought you read the structure correctly and you only got manipulated out of the market for the real move to actually occur. What I'm doing today in today's video is I'm going to be bridging the gap with your market structure knowledge. Now, when it comes down to it, does market structure exist? No. Does smart money exist? No. Does any strategy exist? No. Now, the reason I say no is because I'm talking from a market maker perspective. You have to realize the market is completely unaware of any single strategy. Whether you trade smart money, Wykoff, support, retail, flags, patterns, AI, the market doesn't care. The market doesn't care what it's doing. All it's gonna do is introduce demand, introduce supply, and you're gonna see the manifestations of that. When it really does come down to it, is strategy gonna be the one thing that's gonna make you successful? If it was, everyone would be successful. Now think about it, there's a million strategies out there, there's a million ways you can be successful. Now unfortunately, the majority of traders don't succeed. Now the reason for that is not to do exactly with the strategy, in my opinion, it's to do with the right psychology. Because what you have to understand about a strategy is, all it is a way of you interpreting the market's behavior. That's it. But wait a minute, Kieran, this video is about market structure and why it's not real and why it doesn't work and why I don't use it. So what we're gonna do in today's video, guys, I'm gonna break down a lot of stuff about market structure, supply and demand, order flow, so that you guys have the full package. Because what you have to realize, guys, is a lot of this stuff that's taught online, in my opinion, it's not taught correctly and there's a lot of things missing out. And it's true, you can't put everything in one short video. It's true. You can't put everything in one small course because there's always things that you're going to learn. There's always going to be improvements. There's always going to be refinements. I learn something new every single week. Now, does that mean my strategy changes every single week? No. I've got a baseline. I've got my foundation for success. And this is what you guys should have. You should have your baseline. If your baseline's not profitable, hey, you need to go back to the drawing board. You need to get some courses. You need to get a mentor. Hey, I can be a mentor, but this video is not about me promoting my mentorship. Of course, yes, I have one, and if you're serious about that, you can DM me, but let's get back to the video. When it comes to actual market structure, there's a lot of things that are missing out. And what we're gonna do in today's video is really break everything down and really expose as much as we can in today's video. Now, a few things before we do get into the charts. And if you have skipped to the charts, well, you wouldn't even hear this message anyway. But for you that's not skipping to the charts, you're smart, I like you, because you understand there's more to trading success than actual just charts, technicals. If I'm gonna be honest with you guys, technical analysis is only responsible for 50% of success in trading. I mean, to be honest, I can only speak for myself and the amount of successful students I've been able to create inside of my mentorship program. My channel, I do what I want. Now, what I found in my own journey and what I find with all the students that I work with is that you can't just focus on technicals. You need a balance between technicals and psychology. Technicals, of course, is the chart, how you trade, your strategy and methodology. But of course, when we dive deeper into strategy and methodology, you have to make sure your strategy and methodology is firstly correct. Secondly, you're applying it correctly. And thirdly, you learn from someone who is doing it correctly. Now, once you've got that down, which obviously today's video is going to be about, mostly when we get to the charts, but we also remember there's more than just technical analysis, because you can't just, learn this, come to this YouTube video, apply it once, hit your stop loss, and then think, oh my God, it doesn't work. The first thing you need to do is go and back test it, find out the conditions it works, find out the conditions it doesn't work, find out when it works, why it doesn't work, find out everything in a historical environment In hindsight, go and look at it play out. Train your eye again and again and again. Think of this like you're becoming a professional athlete. You got to go to the gym. You got to shoot your shot, shoot your shot, shoot your shot. Keep practicing, right? Then, once you've got all that stuff done, you can start developing the right emotional intelligence and the right mindset to actually succeed. Because again, you've got two sides of your brain, your left side and your right side. Your left side of the brain is responsible for your technical analysis, and your right side of the brain is responsible for your emotions. And your emotions is what clouds your judgment when it comes to the markets. Now, that's a whole nother convo for another day. There is a few videos on my YouTube about that, and I do, again, teach that in my mentorship. So, just remember this, right? And what we're going to do is we're going to touch on a little bit of psychology now so that you can implement this stuff correctly. Now, again, psychology is a whole wormhole because you've got to learn about belief, self-image, your subconscious mind. You've got to learn how to reprogram your mind. You've got to learn how to heal trauma and look deep into your childhood and figure out what primal fears are causing you to fuck up in trading. Because look, trading goes against all human nature. But again, this is not a psychology video. This is a technical analysis video. But just to touch on psychology, because if you don't have the right psychology, you're never going to be able to apply it correctly. What you guys have to do with this information is firstly go and backtest it, right? Don't just come to the market and think, oh my God, it's going to work instantly, and then go start placing trades, and then you're going to lose some, and then jump to another strategy, jump to another YouTube video. Don't work like that, family. What you have to do is firstly, look back in history, see it play out again and again and again and again. Look at Michael Jordan. That guy knows how to shoot a ball, but when he was in his prime, when he was really grinding to get there, what was he doing? In the gym, every day, practicing. Because practice doesn't make perfect, practice makes permanent. So you make sure you're practicing in the correct way. If you don't know how to practice in the correct way, guys, I do have a video on backtesting. Go back and watch that, and I cover one of the two methods on how to backtest correctly. Once you've backtested this information, you've seen it play out again and again and again, you can now open a demo account and apply this over a big enough sample size of trades. Give yourself 20, 30, 50 trades, 100 trades, execute. If you're successful at applying it and doing it correctly, you can then open a small live account and give yourself another sample size. If on that sample size it does work out, and what you have to do is compare your new sample size return on investment compared to your current strategy sample size and return on investment. And if you're finding that you're taking 10 trades in, let's say, 2 weeks with the new source, and let's say on the old system you're taking 10 trades in 2 weeks, but let's just say on the old system you only grow your account by 5%, but on the new system you grow your account by 10%, okay, it's clearly profitable and it's clearly better for you and your trading system to add it. So you can add it. If not, if your current trading system, of course, is giving you a better ROI than what you add in, hey, get rid of it. There's no point. So now we've got that out of the way, we can actually get to the technicals and we can actually get to the real information. Because again, a lot of people, man, and I say a lot of people because I used to be the guy who did this, and a lot of my students used to do this before they worked with me. I used to be the guy that would go around learning this strategy, learning that strategy. I wouldn't spend time refining and evolving the current one I'm using. You see, a lot of the stuff, guys, that I use now in my trading, it wasn't that someone sat there and sat down and said this, that, and that. Of course, you do get a lot of stuff from other people, from other mentors, from other communities, from other courses, 100%. But I'm an artist, and what great artists do is we take little bits from everything, and then we then make it our own through refinement. But before you can make it your own and take all these things, you need a profitable baseline. What I did is I found someone who had the results I wanted, did exactly what they told me to do, copied their strategy, built that foundation, and then through personal experiences and through spending time in the markets, what I could do is I could realize certain things. Oh my God, this keeps happening. When this happens, that happens more times than not. When this doesn't happen, this happens more times than not. And from there, you develop your own refinements and your own experiences. But of course, before you can do that, like we said, you need that own baseline. So yeah, man, like people go, oh, you learned from here. It doesn't matter where someone learned from. End of the day, who cares? That's just ego, right? At the end of the day, what we're trying to do is we're trying to achieve freedom for ourselves. We're trying to achieve freedom for our families and get out of that 9-to-5 rat race. Luckily, I managed to do a few years ago when I was 20 years old. I mean, now we live in Thailand, doing what I want, when I want. But again, I don't say that to brag or impress you, but to impress upon you the right skills and the right information is what you need to get to this point, right? You can't just come in here and expect to be successful over a few weeks or a few nights. Again, you live a life you deserve at the end of the day, right? If you're not succeeding in trading right now, I believe it's for a few things. When I wasn't succeeding, it was because A, I wasn't putting enough time. B, I had the wrong information. I was doing things wrong. I mean, and that technically goes back to the wrong information, right? So that's it, man. I really believe that you need the right information. And then from that standpoint, which is obviously today's video, from that standpoint, if you really have the hard work and dedication, you can make it. But again, it's not just that alpha mindset that got you success in all your other areas of life. Because if that was the case, the success rate in trading would be a lot higher than what it is today. The reason the success rate is so low, and when I say success rate, I mean overall profitable traders, not win rate, is because trading goes against all of your biological nature. As a human, it goes against it. So we learn certain ways to get success in our lives, but unfortunately that doesn't translate into trading. Now, again, guys, this is a combo for another day. I've been waffling for a while now, but yeah, man, I'm just super excited to be back on YouTube. I know I say I'm gonna be uploading more, but sometimes life just happens. Now, when it does come to it, guys, we've got a lot more content coming. I know people have been saying they want to see more lifestyle videos, more actual real life content. So I'm buying some cameras, I'm buying some equipment, and we're gonna pump out some shit, man. Like, this channel is gonna be crazy. So stay tuned for the journey, and I'm really excited to grow together with everyone on this channel. So yeah, man. Like, with that being said, guys, if you do and you are excited for the new content coming and you are ready for this video, you know the vibes. Sit back, relax, grab your cup of tea. And actually, before we get into this, if you're watching this video and you have a notepad and pen right now, I want you to put your notepad and pen down. Put your notepad and pen away. Watch this video and just absorb it. Come back in a day or two after you've had time, allow it to marinate, watch it again, and now take notes. Thinking, why is it telling me to do that? This is shit I did. See, the other week, I watched one of the first ever pieces of information that had built the foundation for my strategy. And to be honest with you, when I rewatched it, oh my God. I've watched this video 5, 6, 7 times, so many times, I can't even remember. But watching it again, 4, 5 years later, it feels like a complete different video. So I say that to say this. It's not that the information will be different when you watch it again, it's that now you're going to be different. And because you're different, you're going to find something different in that video. So guys, with that being said, sit back, relax, grab your cup of tea, absorb this information, and I'm going to see you guys all at the top, from the top, because the bottom is way too crowded. Sheesh. Obviously, we understand, right, typical market structure is taught as if you've got an uptrend, higher highs, higher lows, higher highs, higher lows, and higher highs. Now, of course, the market will impulse and the market will correct, but it can be very different to how it's traditionally taught. Because again, what we get taught in market structure is, again, we remain bullish. We're trying to wait for the market to pull back so that we can obviously allow the market to continue higher. Or we're taught if we're in a downtrend where we have lower lows, lower highs, lower lows, lower highs, lower lows, we're waiting for the market to retrace to a Fibonacci level, to a trend line, right? Or to some other fabricated concept. And this is the thing, the market ain't aware of any of these concepts. We're taught then to do what? Sell it to go to the downside. Now, what I want you guys to remember, this knowledge is important, but it's taught very wrong, and there's a lot of other things that are missing out. Because if we're looking at market structure, right, we're taught, okay, your last high that leads to a new low, if this is broken, this is going to be your breaker structure. So what do? And you look to take buys to continue in the up direction. What if you're waiting for the market to come down, you buy it, and it does this. Now you're like, what the fuck? What the hell just happened? That's a manipulation. But here's the thing, we can actually stay safe from these manipulations, and we can actually anticipate when it's more likely to see situations like this so that you can avoid taking these silly buys down here. Now, I want to get very clear on what market structure is for me and what market structure isn't. So honestly, guys, this isn't market structure. Higher highs, higher lows, higher highs, higher lows, higher highs. This is actually the result of order flow. Now, we're going to touch on order flow a little bit later, but we have to touch on some few basics first, right? And the basics is this. If the market goes higher, there physically has to be a greater volume of demand present. Keyword, Demand. Demand is what? Buyers. Demand are the buyers in the market. We also have another word, supply. And what is supply? Sellers. Now, here's the thing, right? What are the characteristics when demand's present compared to characteristics when supply's present? Again, we're traditionally taught that when demand and when buyers are in control, you see higher highs, higher lows, higher highs, higher lows, higher highs. But what if this is a weekly time frame, right? And what if the daily and the 4 hour are in a downtrend? And if you're trying to buy it because you think on the weekly time frame demand's in control, well, you're going to keep getting clapped out. And again, it's going to take maybe months, maybe even years for the market to come back to a demand zone to again take more weeks, months or years to create new highs. Now, for me, I do not like to trade like this because this is way too common. This is how everyone sees the market, and I'll show you an example. So here, if we look at our traditional understanding of market structure, we see we've got high, low, lower high, lower low, lower high, lower low, lower high, lower low. You see, I see the market very differently, but let's just entertain this perspective for a second. So if this is our understanding of the market structure, this is our new high, this led to our new low. So this is the point, right, where market structure is supposed to be telling us that the market should not be able to break and we should be waiting for the market to pull back to then continue lower. Maybe we're using some sort of order block, some sort of supply and demand level, whether you're using Fibonacci, hey, it doesn't matter. But for now, we're just going to focus on structure. So if we just play the market forward, and let's say it does break. Okay, cool, no problem. We've seen a downtrend, we've seen lower low, lower high, lower low, break structure. So what we're doing now, waiting for a buy to take the market higher, right? That's what we're taught. So what happens now? If that's the understanding of the market structure, well, where's the missing knowledge between what happens next? What does this mean now? We're getting confused. Now we're like, wait a minute, because you probably just lost on the sell, probably just lost on the buy. Now your psychology is going crazy and you're going, what the fuck, what just happened? See, this is where we have to kind of zoom out and start to understand the nature of true supply and the nature of true demand. The understanding, again, of higher highs, higher lows, lower highs is what we call order flow. Order flow, let's define it. It is how the market flows from supply to demand in series of waves. Now, why does the market move in waves? Because what needs to happen for the market to move higher or lower is there has to be an imbalance of supply and demand. Now, what do we mean? Supply and demand. So again, we said earlier, supply are sellers, demand are buyers. So if the market had an equal amount of supply and demand, which it should do, supply and demand should be in equilibrium, then the market will just flatline and go to the side. There'll be no movement. What needs to happen is there has to be an imbalance of buyers where there's more buyers than sellers for the market to rally. Then obviously we understand that buyers can't be buying forever. So what do they need to do? They need to eventually, anyone who's buying needs to start taking profit. But you have to remember, the footprint of demand entering the market is not the market just moving higher. Yes, it's shown you what's happened, but in trading, you don't make money from seeing what's happened. You make money from being able to anticipate the next move. So, what is the true footprint of demand entering the market? The true footprint of demand entering the market is what we call an accumulation. Now, I know you're looking at this for the first time thinking, whoa, this is crazy. What are all these letters? What are all these lines? It's so confusing. Let me simplify. The evidence of demand coming in is seeing the order flow in the market go from lower lows, lower highs, lower lows, but it's seeing a whole mechanism and it's being able to wait for something to happen. It's seeing the market do a manipulation of lows, followed by breaking order flow to the upside. Now, what happens in here, once you've seen a true accumulation schematic, once you've seen this whole thing actually manifest, given it has all your other principles and all the other confirmations that make it valid, then what you've actually seen is a true footprint of demand entering the market. Now, this is a very different approach because for me now, I'm not just going to buy the market as soon as it comes down to here. Because it's all about what does this accumulation do? Because you can find plenty of these examples where the market, gives you an accumulation and ultimately does something like this. Because you have to understand where you are in your market cycle. There's context to this, family. Again, before we add all the context, before we add all the bells and whistles, we need to master the basics. Calm down, hold it. Listen, Linda, listen, honey, we need to master the basics. So, for now, just remember that this entire thing is your accumulation schematic, okay? This is your accumulation. Now, after you've seen the market accumulate, what you have to understand now is what's more probable to happen next as per your market cycle, is where you can now see the market create bullish order flow, but remember, most people are going to lose. So what the market is likely to do is come down, take this liquidity, and give you what we call a reaccumulation, where we see the market come up, manipulate the lows, then break order flow to the upside. Now, again, as per market cycle, once you've had your accumulation schematic that's valid, right, and you're going to have fake breaks out before the real move occurs, because you need to wait for evidence of buyers coming in. These little puny moves are not evidence of buyers coming in. You need to see a true sign of strength. Then once you've had your true accumulation, this whole thing can act as demand for you to take trades off once it invalidates supply in the future. Then you can wait for it to come back and then trade it back to the upside. Or what can happen is demand can enter later in the range by giving you that reaccumulation, which we just mentioned, where you've had your accumulation, now the market's print is bullish order flow, generating liquidity. It then manipulates the low, everyone now thinks it's bearish, then it breaks structure to the upside. Again, when I say structure, I mean order flow. I'm just going to use that terminology because it probably resonates a lot more with the majority. So once we've now seen this, we've seen proof of accumulation. So proof of demand, not us just saying, oh my God, higher highs, higher lows, because this is trash, this is order flow, and I don't trade this. And you may have seen other videos where I've used market structure, but you have to remember, people's strategy evolves, right? And you're always evolving in the market. When you dedicate your life to something, you're going to keep evolving. You're going to keep having new realizations and new breakthroughs. Now, when I say that, I don't mean constantly switching strategy, right? I have a foundation, and from that foundation, by having chart time and experience, I can develop principles that make my trading more accurate and have principles that also invalidate different setups as well. That's what you have to remember, family. So once we've had this reaccumulation, this is our evidence of demand. So we can wait for the market to come back to continue back to the upside. Now, what's evidence of supply? Evidence of supply is our distribution. Because what you have to remember, guys, when you see this distribution, you're seeing physical evidence of buyers being turned to sellers. So when we look on the chart, what that will look like in an order flow standpoint is the market manipulating highs, manipulation 1, 2, 3, 4 drives. When you see 4 drives in a schematic, oh baby, game time. Obviously with the other confluences. But once you've seen your order flow manipulate highs to the upside, then break structure to the downside, now you've seen evidence of sellers come in, you've seen profit taking, again, given you have cause and effect and you invalidate some sort of prior demand. Then what you can do is once you have that cause and effect, you can use this as your supply to then sell it in the future. Or you can use this for your directional bias, because now, back to your market cycle, you've seen supply come in. It's more likely for more supply to enter by seeing the market redistribute, which looks something like this, where you have your manipulation of your highs, followed by your break of order flow to your downside. And remember, when you're trading this, you have to wait for your evidence of sellers to come in. If there's no evidence of sellers, if there's no evidence of buyers, you're doing guesswork. And we're not here to guess. We're here to look at the facts of the market. We're here to see what has the smart money done? What have the bigger players who engineer the market and have an agenda? What is their agenda? That's what you're trying to do. You need to build out your narrative and get clear on what you're trying to do. Instead of just seeing a market pattern, you have to figure out and start to understand what story is the market trying to tell you. Because when you come to the price action now, and we go back to our example earlier, what we can start to anticipate now is our redistributions. Because once we have seen our evidence of our highs being manipulated, we have a manipulation of our highs, followed by our break to the downside. And again, look, we're in our bearish order flow because we've had our distribution, we've had our redistribution. So we can now wait for our highs to get taken, wait for our liquidity to get taken, wait for our breaks to the downside. Because now, once we've got our confirmed Wykoff redistribution, now we've seen that evidence of our redistribution, we can identify our levels of supply, just this. We can identify our levels of supply and use this to take trades off in the future. And then we have our sell-off and the market continues lower and lower and lower.
Wow.
So if we apply what we just learned, right? We've seen the market now invalidate our true supply. It manipulates our lows, then breaks to the upside. We see our proof of demand because we have our sign of strength. Then again, what's going to happen now? People are going to start saying, oh my God, the market's going. They're going to use their structure understanding to try to take a trade. And if we look, what happens here, all your structure traders, they're buying, they're in profit. They're like, yay. They're buying, they're in profit. They're like, yay. They're not thinking. And then what happens? Boom, it manipulates the lows. So now they're like, okay, cool, let's start to sell. Now this is what I'm doing. I'm waiting for the market to come back to my demand zone. It comes back to my demand zone, I take the trade, then look what happens. We have our reaccumulation, which is what? Manipulation of lows, break to the upside. And again, we can anticipate this because of the market cycle. We've seen what? The market accumulate. So we understand it's more probable for more demand to come in the market because we've seen proof of demand. Like when you see these schematics, guys, they're not random. It costs over $1 billion to move EU by 1 pip. So when you're seeing this schematic, this formed over, I know we're in a 1 minute time frame, but formed over 2 hours, and we're seeing so many movements. There's billions and billions and billions of dollars being put into this. It's not random. So what happens now? Look, the market reaccumulates to continue higher. And now this is our true demand. Look what happens when the market comes back to it. It comes back to it and then continues back to the upside where you can take further trades, guys. So if we're really going to look to conclude now and put everything together, guys, what I want you guys to understand is this. Before you come with this strategy and before you try and implement it in your own strategy, you need to get data on it, right? You can't just come in, add this to your live account. You need to gather data, prove it to yourself, develop principles when you're going to use it, when you're not going to use it. Then demo trade it. Demo trade it 3 to 6 months. See what sort of return on investment you get. If you get a good return on investment because you've applied it correctly, then guess what? You've done it right. If you're not getting a good return on investment, guess what? You're doing something wrong, unfortunately. And if you don't know where you're going wrong right now when you're trading and you would like more information, you would like my mentorship and me to give you my entire trading plan, then like we said in the start, we do have a few more options in the mentorship spaces. Now, we do have a few more availabilities in the mentorship. So if you do want to see how we work and you do want to learn from me and get my understanding of the markets, you're more than welcome to shoot me a message on my Instagram account. My Instagram account is in the link in the description. There's tons of fake accounts going around asking for Bitcoin, all this sort of stuff. So make sure you get on the phone with me, you hear my voice, confirm it's actually me, and then we can go ahead and turn you into a beast of a trader. Now, again, the final thing I want you guys to just remember, and this may be a hint to our next video, is that you need to develop multiple facets of your skill set, right? Trading is multifaceted because you as a human are a multifaceted individual. You've got a left brain and a right brain. You see, when you come into trading, just spend all your time developing technicals and looking for the best golden source, you fail to realize you haven't developed your right brain. You see, if you went to the gym and just trained your left arm, what's going to happen when you try to use both arms? It's going to be very difficult. And that's the thing with trading. It requires both hemispheres of your brain to be integrated, and you need to learn how to do that. And if you don't know how to do that, guys, well, we can definitely do another video on this. I do have a few about this on my channel, or again, we do teach this in the mentorship. So with that being said, guys, I hope you guys did enjoy this video. If you do want any help, you do have any other suggestions for anything, please don't hesitate to reach out. More than happy to help, family. But with that being said, it's been the Master of Coin, and I'm going to see you guys all at the top, from the top, because the bottom is way too crowded. Sheesh!